Hey guys, this is Tanner Invests here. Thanks so much for watching today. Today was an awesome day in the market. As you guys may know, I've made 3 videos so far in my 1 month tenure on YouTube, and 3 of those videos have been about Zeta Global. Today, I will be getting into Zeta Global, but really I wanted to just start off by saying, thank you guys so much. I'm already over 500 subscribers, and I really want to take this time just to say thank you. As you may have noticed, my last videos, I had really crappy quality. I was using a Blue Yeti microphone from like 2010, and I was using a camera that it was like a Logitech something that I got around the same time as that. And so I've already invested into the channel, guys. I've gotten so many great comments, and some people out there have said, hey, you have great videos, but you really need a better camera. You need a better microphone. So I did go out and I bought MK2 Elgato camera that you're seeing here. It's a webcam. Now, I am still trying to get used to some things, so you're going to see some things. Watch this. See that glare in my glasses? Yeah, when I have a white background, I need to figure that out. But also, I got this microphone here. This is a Rode pod mic. So you're going to notice if I do something like this, hello, hello, 1, 2, 3. You probably didn't hear that at all because this mic is super like sensitive all to the mouth area, which is, that's what she said. No, but actually, so guys, also got this stand that's really freaking cool, and you can't see that. But my point is that I really wanted to just like take time, just say thank you to everybody on this channel, and I'm gonna go ahead and jump into my trades this week and a few other things. And I'll get into more. Ask me some questions in the comments. I've been replying to everybody. I am a tech sales guy. I'm 29, turning 30 this year, and when I came out of college, I actually graduated with a degree in finance, and I never really was able to make that dream a reality where stock trading. I've been very interested since I was a kid, and I ended up going into sales. I couldn't find a job in anything finance related at all. I couldn't even I was applying for like teller positions at a bank when I graduated college with a finance degree. Couldn't get anything. So I ended up going down the sales route, and I'm very happy I did because I'm doing really well now. I work for a actually not Fortune 500, sorry, publicly traded company in tech sales, selling software and tech solutions. So loving where I am and loving, everything about that. Now I can make the dream a reality by doing things like YouTube and actually, being like a quote unquote like retail analyst. Sorry. But none of this is financial advice, guys. I just would love to share like my convictions, and that's what I've done this week. I'm gonna go ahead and share my screen here because this week I've had a very exciting week in the market here. So as you see, this has been a position that I've been in now since my average cost at $14.68. And I'm gonna zoom in here. I've noticed some of my videos I don't zoom in quite far enough. But Zeta Global is now trading overnight 8.62%. They just reported earnings. And guys, I just made a video like 2 days about why I was so bullish on these earnings. I mean, this company has consistently beat over and over and over, and I'm going to get in more to that. If you guys want, I'm going to try to add chapters where you can scroll, timestamps throughout the video. So if you're curious about that, you can go ahead and skip on. But I do want to talk about some other trades I've made lately. But yeah, so far this week I've doubled my position in Zeta. I was at like $3,000, and then I added another 3, and then I added another 2 from there, and I'm up 17.56% on this position. So some of you guys are asking like, Tanner, where do you find your trades? Well, most of the time I actually find it through X. Not gonna lie, there's a huge FinX community. They used to call it FinTwit, FinX, FinTwit, where a lot of retail investors they share their analysis on X. Like they'll create these huge threads about why they're bullish certain stocks, and I do the same thing. So if you guys don't mind, give me a follow. I'm at 312 followers, and I started this like right before I started YouTube, so here in a month. And guys, this is a long-term solution for me. I'm going to be doing YouTube for years to come, so I'm really pumped for that. I've already made some friends within the community. Shout out to Risky Ryan Trades. You're awesome, dude. He reposted this hilarious video today, how I feel adding to a position before earnings and it actually goes up. And this hilarious video. That's how we feel today, guys, when we've been yelling and screaming from the mountaintops that we are super convinced Zeta is undervalued and that people need to give this some credit on its name, guys. Like seriously, Zeta is popping off. I'm going to get more into that, like I said. But real quick, I just want to show you that, I show a lot of my trades right when I make them on X. I don't know if that'll be forever. But right now, like for example, today I did share that I bought I sold five cash secure puts contracts, which I'll actually get into that now. So today, I was looking at the options chain for Zeta, and I wanted to sell some puts. Basically, when you're selling a cash secured put, it's basically agreeing with the contract that's the person buying the put that you're willing to buy 100 shares of the stock at a lower price typically than it is today. So if you're okay with holding shares at a lower price, you can actually earn a premium upfront and buy those shares under where the value is today. So for example, today when I bought this, Zeta was trading a little under $16. And I said, hey, by the expiration on Friday, August 8th, I will buy your shares of Zeta at $14.50. Robinhood doesn't do a great job at showing that on here. But basically, my break-even price, that means, is $14 because I got roughly 50 cents per share. And when you're buying or selling a contract, an options contract, it's 100 shares in a lot. And so I was able to, I did this 5 times where I collected $50 per contract times 5. So I got $250 today just to basically tell someone, hey, I'll buy your shares if it drops to $14.50. And so I was confident it wasn't going to drop. And thankfully, this could still execute because, that's Friday. So we could drop, but I'd happily gobble up some shares at $14.50 at this point after seeing earnings today. So I've been exploring and, cover calls and cash secure puts. I don't buy calls. I don't buy puts. I just do the safe plays. I'm not a risky investor at all, guys, but I do feel like, lately I've been doing things like this where if I have a conviction, Lemonade, I don't know if you guys have looked at Lemonade at all. I haven't really been as bullish on this stock particularly than other people, but honestly, this morning, it was pre-market. They dropped earnings pre-market. I saw the report right around here. I think I bought at $39. So yeah, about right here, right before this big run up. And so I went ahead and gobbled up some shares and it took off. It's up in one day 30%. So I made a quick little 20% because I bought it a little after it already had risen a little bit today, but $216 on that trade. One thing I'm really proud about too is Reddit. I have a pretty decent sized Reddit position. My average cost is $114.64. And this is just, again, one of those trades where a few months ago, this wasn't even that long ago, a few months ago, it was trading down here at around 95 to $100. I got in at right around here in early June, and it's gone up significantly since. I'm up 73% on that position. Now, guys, I'm not going to just show you my winners. I will also show you my losers. And I actually tweeted, today. I never ask my ex followers to judge me on my winners. I ask them to judge me on my losers because I have so few. You get what the reference is? Yes, it's Wolf on Wall Street. Yes, that's probably an overused reference in Finex, but doesn't matter. So United Health is a company I invested in, and as you see here, guys, we don't always win. I am actually down about 4,000 on that position, but the Reddit gains alone, I'm up 4,000 on Reddit, so it all evens out. I'm up over 40% year to date, guys, or actually slightly under 40% now that the market has had a little correction. One other stock I bought this week as well, guys, was Mercado Libre. I don't always buy leading into earnings. I just buy really good value in earnings. And I felt like Lemonade had already, let's look at Lemonade. Lemonade over the past month has been kind of trailing down other than this big pump up. It was at $42. I bought in at 39. So, and it even had dropped down to about 36. So it was down roughly, as you see here, about 15%. And then I felt like it was probably going to have a good earnings because this company is known to beat earnings as well. And so gobbled up some shares there. Same story-ish with Melly. Funny enough is, as you see kind of what happened here, Melly actually popped before earnings. And then when earnings released, here, let's go to the weekly chart. This is what happened, before earnings. And then boom, 4 o'clock, the report came out and it dumped about 5%. And then it's recovered since. Mercado Libre is a company that I will be doing a video on in the future. This company is amazing. It's kind of like the Amazon of Latin America. And so Highly recommend checking them out. They also are kind of like a PayPal of Latin America. I only bought one share, but I do plan on potentially adding more to this position. That's the issue, guys, is there's so many stocks and there's so many good potential buys that it's really hard. It's like, where do I put my money, man? It's like I almost felt bad putting one share in a Mercado Libre. That means free market, by the way, in Spanish, and I'm not the best Spanish speaker in the world. But it's like, man, could I put this money into Zeta? Should I put it into Lemonade? Reddit's pumping. Like, I don't know. But in this case, I felt like it was great value. I love the company. I've always wanted a little bit of exposure, so I don't mind holding like a good company. So that being said, guys, now let's go ahead and jump into the Zeta Global earnings, because you guys know that I've been super bullish this company. I've now made 3 videos. This will be like kind of my 4th. But be careful, because I'm probably about to blind you guys with my my laser vision. There we go. Sorry, that was lame. But as we see here, guys, Zeta Global reports their 16th straight beat and raise quarter. Wow, who would have thought, guys? They were on their 15th, and what are the odds they might do the 16th straight? Especially when, you know, my last video I covered things like advertising revenues have been through the roof right now, so people are spending money. What are they probably going to do? Probably going to spend money with Zeta as well, knowing they're a big AI marketing cloud, right? So let's go ahead and zoom in here so we can kind of dive into these. You know, nothing was like mind blowing except a few things. So the revenue, you know, they beat pretty substantially. They're increasing 35% year over year, which they guided like 30% last quarter for this quarter. So they're like a 5% gap there. They're exceeding their midpoint guidance here, as I just said, by $11 million. Their generated net cash provided by operating activities of $42 million and increased 35% year over year, and free cash flow of $34 million and increased 69. Nice year over year. So guys, that is amazing. So the free cash flow up so much was, you know, a contributing factor. The fact that they are now 18, I believe, 18 straight quarters where they've had increase in their adjusted EBITDA margins as well, which is stated here. But now here's what I think is kind of the most bullish, other than my beautiful CEO, David Steinberg, talking on the earnings call, which I'll get into in a minute. But I really think, guys, that this is my favorite part of the earnings, is that as of July 25th, Zeta used 85 million of the 100 million share repurchase authorization approved in November 2024. So what that means is when the short report happened, which I'll link some videos below if you guys are curious. I've already kind of talked about the short report a little bit. But in November, they got hit by a short report. Their stock plummeted, which I'll show you just on the chart real quick. You guys all are aware. Right here, November 8th is when, or November 11th, sorry, is when that tanked the stock all the way from, you know, 36 bucks down to 17. If this short report never happened, guys, I really think this would have happened. The trade desk would have probably happened to Zeta. And look over the past year, well, that's maybe not the best, but you get what I'm saying. Let's look at 5 years. So this was the run up, November around here, and trade desk went down for different reasons. But my point is you've seen some other advertisers in the space skyrocketing. I think their stock would have kept going up, to be honest. Now, let's go back. Zeta's board just approved a new 200 million stock repurchase program over 2 years to supplement the existing stock repurchase program in place today. So what I'm saying, guys, is they've used 85 million of the 100 million share repurchase. What does that tell you? And then now they're approving another buyback program. It means they think the stock is undervalued. There's no ifs, ands, or buts about it, guys. They're a fast growing company. 100 million, 200 million, any type of capital is very great to have. You know, that capital can be used for all kinds of metrics. You know, just holding cash, you can hold it for your balance sheet. You could use that for sales, marketing, grow the business. I mean, obviously they're doing all these things, but they're also approving of repurchase programs over the next couple of years because their stock is beaten down so much that they're confident it will be going up. This is going to help increase EPS. This is going to allow them to keep beating on their adjusted EBITDA. This is going to do all kinds of things, guys. So, I mean, this is fantastic. I'm super pumped. So now let's scroll down to this. We delivered another quarter of industry-leading growth fueled by demand for our AI-powered marketing platform, said David Steinberg. As we head into the back half of 2025, our AI-driven momentum on the heels of the Zeta Answers release, Zeta Marketing Cloud deployments, agency expansions, and one Zeta wins give us conviction that Zeta is poised to capture even more market share. This is what my favorite part of this is. We laid out an ambitious plan for 2028 revenue. Remember, guys, they actually guide out every 3 years. So in 2022, they guided to 2025, and 2025, they guided for 2028. They laid out ambitious plans for revenue, free cash flow in February, and our first half results puts us firmly on track to meet those goals. And then he said, on the back of the strong execution and pipeline this quarter, we have the confidence and visibility to meaningfully raise our full year revenue guidance, adjusted EBITDA, and more importantly, significantly increase our free cash flow expectations. That's amazing, guys. So as we talked about, they slightly increased their quarter over quarter guidance, and then they slightly increased their year over year guidance, which is what you want to see. Now, one other thing that we talked about up here is, or was it down here? They talked about stock-based compensation and how stock-based compensation is not increasing from the last quarter, which is fantastic. Not really seeing it, but oh, here it is. Ended quarter 2 2025 with 0 net dilution versus quarter 1 2025 and tracking to achieve 2025 dilution and stock-based compensation expense targets. That's fantastic, guys, because I want to recall my last video, just this is 5 seconds, just bear with me here. What did I say? The 3 most important things is stock-based comp decreasing. We want to see the net retention rate on average revenue per unit. We want that to be increasing. And then we want to see the direct platform versus integrated platform revenue to be also increasing. So we want direct to have. All right, guys. So the 3 things I wanted to see out of this earnings, which we obviously are seeing here, which I'm going to get to in the numbers too, is 1, I talked about stock-based compensation. We just talked about that. The second is ARPU expansion and just overall net retention rate, which we can see here. We're accelerating year-over-year scaled customer count even further. We have year-over-year growth of 21% this quarter. We have significant ARPU expansion. Again, this is a great stat here. The second quarter ARPU for $1 million plus customers is 17x the customers that are only spending 100 to 100 million on the platform. So the super scaled customers ARPU is generating so much more than the scaled. And as you see here, they got super scaled customers. They have 9 more in this quarter alone. And as you see over time, I mean, there was 3 quarters in a row where they hadn't grown a single super scale customer. And here we are in 1 quarter doing 9. Last quarter, they did 9 as well. So, or 11, sorry, 11 last quarter, 9 this quarter. And that's great to see. Guys, they did more super scale than they did scaled, which I don't even know if that's bullish or not. Probably not, because we want to see them both growing. I mean, fantastic. I think it's more bullish, obviously, because of the stat here. Because it's more bullish because the more super scaled you have, the more ARPU. There's 17 times more ARPU. So that is super bullish for me, guys. I love it. 35% revenue growth. We talked about that. Now, the other thing I wanted to talk about, direct revenue mix. And on the earnings call today, the CFO and the CEO talked in detail about how important direct revenue mix is. Because as I mentioned in my last video, there's basically 2 types of revenue mixes. In my last video, I talked about how, Amazon, Meta, Google, all these platforms are increasing their advertising revenues. Now, all of that is just really the 25%, because anytime you're using an integrated platform, it takes the gross profit, the profit margins a little bit away from Zeta. Now, the direct revenue mix is if the customers are using Zeta essentially as an end-to-end solution where they're saying, hey, I want a campaign. I'm going to go use Zeta's marketing cloud, and I'm going to do from start to finish and use Zeta's product. And so we want to see that number always increasing. As you guys if you recall, quarter 2 of 2024, so year over year, we're up from 67% to 75%. And in this quarter alone, we're up 2%. So that goes from 73 to 75%. So the CFO mentioned, he was asked by an analyst about gross margin. And this was his response is right now we're sitting at about 62%, which last quarter we are about 60, which, oh my gosh, that's awesome. But the direct revenue mix is the key contributor to that, because the more customers that actually will use Zeta's platform from end to end, the more money they get out of the pie. And so the less that goes to third parties, any integrated platforms. So we want to see that number continue to rise. One other thing that they kept mentioning was their sales team. So they mentioned in detail, they actually mentioned the guy's name who's kind of running the sales team and how he has a great career background, but he's done a fantastic job. And one thing, I actually have a little note here that I want to bring up, because he did say that we are seeing growth where we are hiring. So what that means is, so let's go down to this slide here. So Zeta is well diversified across a wide range of verticals. So we have consumer retail, we have insurance, we have telecom, we have financial services. So my point is when you hire someone, for example, let's zoom into this a little bit more. When you hire someone that has automotive experience and they maybe understand all of the automotive landscape, they might not be the most savvy at banks, walking into a bank and getting their business. So what David Steinberg said is they're hiring people that have experience within these realms in marketing so that they can target all these different revenue verticals at once. And so they're seeing growth where they're hiring. So that's why we're seeing a ton in consumer retail, insurance, telecom. So these most likely are their best salespeople at this point in time. And over time, they hire someone with great automotive experience. Maybe that's going to increase higher. Maybe healthcare, because these, like automotive only being 4%, by the way, this is a marketing company. Think about how many freaking Ford truck ads you've gotten, or Mazda ads, or anything. Every car, automotive is huge for advertising. So I think, guys, there's a ton of room to grow at this company. Right now, they're serving 44% of the Fortune 100. They're 2 of the 3 largest automotive companies are actually using them. So there's so much more room to grow. I mean, that stat isn't even saying 5 of the 10. It's saying 2 of the 3. Clearly, they need to, ramp that up a little bit more, which I'm sure they will. So other than that, guys, I mean, this quarter was obviously great. I mean, the stock reacted the way I was hoping it would. And I plan on, holding this company for a long time. I don't think it's valued $17. I still think, quite frankly, it's undervalued from here. So that's always great. I did have their 10Q. I mean, it's kind of short. This isn't like a, end of the year 10Q where it's like a million pages long, where they're, re-showing their thesis on the company. It's just kind of tracking the same thing we already looked at. So yeah, guys, I mean, that is really it for me. Well, thank you everybody for tuning in today. That's it. Zeta Global, if you're a shareholder, congratulations. That was fantastic. It was so exciting to watch live and tweet around with the community there. So one other thing, I also hold other stuff. So NVIDIA, Hood, SoFi, and we have Shark Ninja, PayPal, even Amazon. What do you guys want to see next? Let me know in the comments. I will obviously still be covering Zeta. I still want to cover, I think my next video might be, obviously I want to do some more on Sharpling Gaming, which is ticker SBET, also BMNR, which are the Treasury plays. Been doing a lot of great video content around those. Those have been getting most of my views, like a lot of views on those. So loving that. And then, of course, I want to cover some other things that I like Reddit. It's a great thesis. I think that's a really intriguing stock story. We also have stocks like Nubank, that are fantastic. I talked earlier about Mercado Libre. Definitely love that one too. So leave a comment. What should I do next? Thank you guys for watching. Don't forget to like and subscribe. Thank you.